it's Ryan with Stock Investing and Trading 101. Today I'm making a video showing you guys 3 stocks that I plan on buying in February, or the stocks that I'm already currently buying. I'm pretty much buying all of these stocks that I'm looking at, and let's get right into it. So the first stock that I'm looking at buying, and that I've actually been buying quite a bit of, is Tyson Foods, ticker symbol TSN. So this stock has had, it's down about 15% from its highs, and most of this has happened in the past about 2 months since the year started. So we're down about 15% off the highs. They had earnings recently where the revenues fell about 2.4%, and they also missed their earnings per share forecast by about nearly 5%. So these are part of the reasons that the stock has came down. Also, the stock is broken below its 200-day simple moving average, which is a downtrend indicator, indicating that this is now downtrending. Talking about more about their earnings, there's been no change in their revenue estimates for 2020, but there has been a small downgrade in their earnings per share forecast for 2020. So that's kind of the fundamentals behind it. It was a very good performing stock for 2019. So far in 2020, it has had quite a pullback, but I am buying around these levels. It looks like it's kind of been starting to trend sideways for the past maybe about 1 week. So this might be a sign that it's bottoming out. But either way, it's currently yielding, I think, just over 2%, which this stock isn't necessarily the highest yielding stock, but I think it is a nice safe pick, and I think, it's something that I'm currently buying, something you might want to, keep an eye on. But it's something I'm buying, and I've actually built quite a position in my portfolio. I think currently maybe it's about 5%, give or take, of my portfolio, and I've bought the entire position in the past 1 week. So if it does continue to go down, I'm going to average more. Otherwise, I have a nice solid position as of right now, and I plan on holding this one, collecting dividends, and I think it's a nice safe stock to keep your eyes on. Next, we're going to talk about a pharmaceutical company, ticker symbol MRK. This is Merck. So this stock has had some news as well. It's currently yielding about a 3% dividend yield. I was just looking at an article, and if you're using the intrinsic value based on its future cash flows, it's currently undervalued, and it's somewhat significantly undervalued if you use that metric. However, this one is in a similar situation to Tyson, where it's down significantly since 2020 began. It's performed very well in 2019. I believe outperforming the market, or at least performing very closely. But 2020 it's been very rough, and I'm buying the dip. Looking at some of the technicals here, it's broken below the bottom VWAP, which is usually somewhere that I like to buy a stock. If you look at its past performance, every time that it breaks below this bottom purple Bollinger Band, it snaps back up pretty quickly. So you see here, it breaks below, it snaps up, breaks below, snaps up, and it happens almost every single time. So here we are, it broke below pretty recently, snapped back up, broke below, up, down, and so I'm expecting this one to, come back into this Bollinger Band range, and I'm buying here as well. I'm not buying as heavily as I am into Tyson Foods, but it is something that I'm liking. I think while it's yielding 3%, which is a pretty decent yield for this company, I think it's a decent buying opportunity. However, it's not something that is going to be my biggest position. It's not something that I'm, going crazy and buying a ton of, but it is something that I think is very interesting at these levels, and I think it has a good risk reward, and it's a good investment, long-term dividend growth stock. It's just a solid stock. They actually have some other news, and part of the reason this stock has came down so far is that they're doing a spin-off of their top-selling drug called Keytruda. So this is probably some of the biggest news that it's having, is that it's doing the spin-off of literally its best drug. So This is going to affect the company, obviously, and this is part of the reason that it hasn't been performing well. But I think this is something that it will, bounce back from. And yeah, and just like Tyson, this one has broken below its 50 and 200 day simple moving average, which indicates a downtrend. For how long this will go on, nobody knows. But it is just something to note that these stocks are in a downtrend. So if you are purchasing now, just know that it could continue to go down further. And at that point, I would probably average my cost basis down by buying some more. But it is something that I'm building my position on, and I'm starting building my position on. And I'm not buying it as heavily as maybe Tyson Foods or some of these other stocks. So for the third stock we're looking at, I kind of have a few stocks that are kind of honorable mentions. So I guess we're going to go with what I was originally going to go with, which is Altria. So Altria is down significantly from its last earnings report. It's had a lot of negative headlines from all of the vaping headlines and the flavored Juul pods and stuff like that being banned. It has a huge stake in Juul, which it's had to write down. So its investment in Juul, which it has a huge stake in, has been really hurting this company. On top of that, the smoking age has been increased to 21, which is also negatively going to affect them. It's going to cause, people under 21 to not be allowed to purchase their products. So that's kind of, stopping some more of their sales. However, this stock has very healthy, high margins. It's currently yielding, I think, about 7%. At least over 6%, possibly over 7%. So it's got a high dividend yield. And what's amazing about this stock is that it can make up for its lack of demand because less people are smoking than there used to be. Also, the age has gone up, causing probably less sales, I would imagine. And part of their Juul vaporizers are, now illegal to sell, which is also going to affect their sales. But what's great about this company is that they can offset some of those negative headlines by increasing their cost of cigarettes. And so that's historically how this stock has kind of made up for a declining demand, is just by increasing their cigarette sales, the cost. And people that are smokers are going to be buying cigarettes, I think, regardless. Most of these people are addicted, unfortunately. So if they do increase the price, it's not like people are gonna all of a sudden stop smoking. It's, most likely they're just going to accept the higher cost, pay the higher cost, which in turn will offset some of the declining demand for Altria. However, as I've kind of mentioned, this is, I suppose, a declining sector, and it is, somewhat controversial, and it's got a lot of headline risk around it with, Juul pods being banned and cigarette, it's got a lot of regulation risk, I would say. But it has got a very nice dividend yield, and it has had quite a pullback in the past month or so, currently trading at about a $45 price. We have 1-year highs at about $58, so and we have lows around $40. So we're about $5 off the lows, and I'm averaging into a position here. I actually have a somewhat significant position in Altria across my entire portfolio. However, it's something, I suppose it's somewhat of a risky investment, but at the same time, it has tons of dividend growth through the years. This has been a good performing stock now for many years, and I think it will continue to pay that dividend, and that's mainly what I'm investing in this for, is that high 6 to 7% dividend yield. Moving on, I'm going to go through 3 more stocks as kind of honorable mentions. The first one is J&J, good old Johnson & Johnson. So looking at this, we are pretty close to all-time highs. We have a pullback down to about 150 currently. So it's not that great of a value currently. It was actually a good time to buy in the middle of last year when they had all the allegations and the lawsuits going on. It really caused the stock price to tank. But it is a very strong stock, and I'm slowly, very slowly averaging into my position at this point in Johnson & Johnson. I would be buying much more of it, but in my opinion, it is a little bit on the high side of price still. Next, we have Caterpillar, the industrial stock. So this is somewhat of a volatile stock. I suppose volatile for a dividend growth stock. So it's got a lot of ups and downs. It's got a lot of headline risk with China and things like that. So I think that's one of the biggest risks right now is China. I was really buying. I've been kind of trading this one, I suppose. I've been buying it when it's dipping, selling it when it's high, and just kind of doing that. So I was kind of buying during this decline right here when it was coming down. Since then, it's came up and it's right above the middle Bollinger Band. It's just above the 200-day SMA, so it's back in an uptrend, and it's something that I think it's worth keeping your eyes on. This is a solid dividend growth stock. They've had a growing dividend now for many years. I think the current yield is only maybe 2% or so it's not the highest yielding stock, but it does have a healthy dividend, and it is have a very long history of a growing dividend. The last stock that I'm going to be looking at and sharing with you guys today is the most speculative stock of the bunch. This one is Bed Bath & Beyond. So this stock, it's kind of had a shaky and volatile history, I guess, for a while now. It's had a huge sell-off during, I believe, its last earnings, where it sold off from about $15 to $11, which I think is like a 20 to 30% dip in one day. And when that dip happened, I actually bought during probably about one of these candles right here. So I bought the dip on this one. It's a very small position in my portfolio. It is a speculative position, but I think it's currently yielding about 4 or 5%. It does have a lot of risk. It's in a declining sector. It hasn't been a strong performing company, so I don't want to give you guys the image that this is a screaming buy, that it's an uptrending stock, it's a growing company, because it's really none of those. But it is a speculation play, and I figure if I buy at around $11 per share, I have strong hopes that I'll be able to get out of it for a profit. This is more of a trade, a swing trade, than it is a long-term investment for me. So I just want to be clear about that this is really a swing trade. It's a speculation more than it is an actual long-term investment. So those are the stocks that I'm currently watching for February. I think Tyson, Merck are some of the strongest stocks that I mentioned, but I think J&J and Altria, Caterpillar, I think those are also good stocks to watch. So I'd also like to hear whatever any of my viewers or subscribers are currently some of the stocks that you guys are watching or buying. Definitely feel free to drop those in the comments. I would love to hear what everyone else is looking at. It's actually helped me quite a bit having other people kind of put their 2 cents towards it helps me look at more stocks, and it just kind of helps everyone. So feel free to drop a comment as to which stocks you're currently buying or watching. As always, thanks for watching the video. If you haven't, please like the video, subscribe to the channel, drop a comment with what stocks you're currently buying, and stay tuned for more videos, guys. That's all I got today. Thanks for watching.